The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Monday through Friday, 11 o'clock till noon Eastern Time, 877-927-6648. Love to hear from you. Oh, a couple of things are going on here, and they are saying that there is a fight between the Bulls and the Bears, and that we basically have a narrow trading range at this time. We've had it for a little while. I mean, 100 to 130 points here or there. But it doesn't make a difference unless two things happen. Bad news becomes a big negative for the market, and it raises the volatility index. The VIX index starts to climb. It's already at 1235, up $1.01. Not good enough. It needs to hold in the upper 12s, like 1260, and then you'll start to see the market deteriorate. But you also need bad news. And right now, the news is just kind of, it's neither here nor there. It's not bad, it's not good, it's just there. So looking at the 2-minute E-mini, you can see it went from a low of 2173.50 to a high so far. The high of this move is 2182.75. And then, this is quite some time now, since about 10:30, we've been in a trading band, very narrow trading band, 281 on the downside, actually just above 281 on the E-mini, and at that 21, what did I say it was, 82.75 level? Yeah. So we need a break to one of the two sides to start another move of at least some substance. I had said to my subscribers to my opening call over the weekend, well, I said this morning, and I showed them the chart last night as I was updating out throughout the weekend. I had said that the Chapman Wave short-term trading index, that's actually Richard Arm's index. I just use certain numbers that work for me. And it said there was such a high spike. Look, here it is. Let me just go to this and I'll make it much clearer. There we are. What I'd said is that within the context, here we go, is what I show is the second chart that goes out every day, maybe second or third. It's the overview and market today section. It shows the trading band. It says what the resistance levels are, and it shows what the support levels are on the down 120-minute chart. Shows the VIX index actually went to a trough D, and that says, yep, it could bounce a tad. And it showed something very unusual that on options expiration Friday, what happened was the short-term trading index shot up to 3.28. Now, these kind of aberrations do occur once in a while. I'm talking about maybe two times a year, 3 times out of the 12 options expirations. And that could be a distortion. I said, maybe it's a distortion, but there should be a 9 to 11 point spike, and it could come from lower down. And then you got to be careful because then the markets start to fade. And here we are at peak E in the Dow and the daily, and peak G/C in the daily chart of the S&P. And then I give you exactly what to look for and why you've got to look for it, what's working, what's not. And then, of course, there are other techniques that I use. I showed the triple yield weekly chart of the bond. That's the bond yields. The white is the 30-year T-bond TYX. The 10-year T-note is the TNX. That's kind of yellow goldy color or brown. And the 5-year T-note yield, the FVX, is the cyan. And they just stuck in a range. Unless they're going to break out to the upside or down, I think that they just stuck in. Remember what I've been talking about is that the Fed is kind of obligated to keep things as narrow as possible because there's a race on throughout the world for the lowest yields. So I don't think they're going to break into that pattern. They could bump it up another quarter, but it's the de facto yield that is the issue. What it is at that moment, not what they are projecting. So those are a number of things. Now, this is actually very interesting if I can find it here. Look, If you can see it, let me just check. Yep, it's coming up. And there, okay, there it is, clear. There's this arch formation. It has a Chapman wave that went to peak D, recycled the Chapman wave instant restart, went to a peak F at 18,622 on the 20th of July. That was, for me, wave 5 in Elliott wave on the 120-minute Dow chart. Then it comes as the second one, and then it comes back down. It does a 5 to the downside, a trough F. That was a peak F. This is a trough F at 18,000, what was that? 18,000, I believe, 240s. And then it starts a brand new peak, A, B, C, D, E, and then it goes to F. And once again, Elliott wave 5, that's what I counted at, 18,668 on the 15th of August. And then it starts down. What I was looking for was wave 3 to go underneath wave B of 18,468. What did it do today? So far, it's gone right to that level. It's gone to 18,466. That's the low of the day. So it's gone to C. So there could be a little bit of a bounce. And what I've been saying is that I think it's a gentle pullback, even though we are short the Dow. I've got a feeling that we're going to be covering quite soon. Because I don't see the bad news that has to filter into the market, number one. Number two, it's politics as usual. Every administration in the 2-3 months before the election, they want to make sure that the market doesn't go below key levels. Remember in 2008, I said, as we got into this period, I said 12,000. If the Dow breaks significantly under 12,000, President Obama's going to have a real tough time coming back in. Although all the media and every aspect of his election campaign was pointing towards him being the favorite candidate for the media. And the other thing was, here we're looking at a Dow, and if the I think 18,000 is a reasonable number, but if 18,000 is taken out, a close below 17,600 between now and election day, I think that's going to set in place a certain way of being able for the Republicans to say, hey, economy, which is what they should have been saying all the time. Just one word, 2 words, the economy. And, the opposition could say, look how well the market has done. For those of you who have 401ks, etc., look how the market's recovered. You should be feeling good. I mean, I just understand why they don't say it. So, okay, let's go to the nitty-gritties. I will talk about bonds. I was asked about that before. I still think the Japanization of our bond yields is in place, and that they could. I have had no intention at all, except for very brief moments, for a quick trade to short bonds. I just don't see the benefit. I don't think bonds are going to go down sharply. Maybe there'll be one quick spike to the downside, but it's really a dangerous way to play it. So let's go through the numbers. I'll do it with the charts. IND. Have I got time? Yep. Oh, I've got 45 seconds. I haven't got time. I'll do it when we get back. Suffice to say, the Dow's up 2 at 18,555. S&P's down a fraction at 2183. Comp index is up 8 at 5247. The VIX index is 1231. Now it's only up 97 cents, starting to pull back. And gold is down about $3. I'll be right back after these important messages. Basil Chapman, back after a few days rest, and looking forward to your calls.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back, and I just wanted to show this 10-minute chart of the E-mini. You see these big spikes to the upside? See this resistance? Let me just put a big long rectangle there. See? What did I just do? Oh, hit the wrong thing. Let me just put this rectangle right there. Okay, and you can see that there's a lot of resistance on the upside. Also, I do not like these single leg A spikes to the upside. They tend to give back very often, and they give back a lot. In this case, if the E-mini goes under 2178 and holds under that for 3 10-minute bars, that's just not good. By the end of the day, we could be giving back a chunk. One of the reasons why we went short and added to the short side is not just that this chart was pointing to a second arch formation. It's because if you look at the Dow, the Dow daily, and this is my first chart that I send out every morning, the Dow daily with the Chapman Wave notation, what we're looking at is that the MACD is actually quite poor, and the stochastic has now gone back under 80%, it's at 76%. And that's suggesting to me that we should have a very similar pattern to the late, I guess it was mid-July, when let me just get that. There it is. That doji high on the 20th of July at 18,622. And then the market has made a series of very gentle low lows and lower highs, low lows and lower highs. That could be the case right here, because now we've started leg C to the downside. There's A. And it's just like the 120-minute chart in this case. They don't always match, but they do now. And that's saying that if we close towards the low of the day, let's call it 18, I'd say today that 18,460 should be support, where 18,466 is the low. If we close under, if the Dow closes under that, that would suggest to me that we're in a digestive phase, and that the second arch formation, remember I showed you a 120-minute chart, or one arch, second arch, is coming back, and it should test under the 18,300, 400 area if the volatility index continues to hold in the 12s and then move towards the 1250s, 1270s, and then maybe even hit 13 today. That would do it. If there's a sudden reversal, now, what I had said for my subscribers is that you can expect, we might have had it early this morning because there was a 10-point pull pop-up, but normally it occurs so that the cash index is influenced as well. That's exactly what happened on the last rally. the futures. Let me just go back to this chart right here. The futures in the 10-minute chart, you can see we're way down in the 2130s, and then all of a sudden there was a spike all the way to the 2183 level. So there's your 10 points, and now we've just broken down. Remember what I was talking about a moment ago? So now this is suggesting to me that I have a little bit more confidence. I said today to the subscribers, we have the short positions. I didn't really want to add unless certain things happened, but at the same time, in a way, we're kind of heavily short for, not very heavily short, but we're short the Dow. And as such, I believe that if we're looking at the peak F top that was made in the 120-minute chart, as I showed you earlier, in this one, 18,431 is the 200-period exponential moving average. That's going to be important. How does the Dow handle the 18,430s? And then how does it handle if it goes into the 18,390s or lower? What does it do? And is this a serious turn down? Because the MACD and stochastic have turned down way sharper than the price. And that's just saying to me, you know what? We've got something very similar to what we saw before. The Dow went to a new recovery high at 18,688, action all-time high. But at the same time, the MACD was failing. Look at that, deflecting lower, and the stochastic was deflecting lower. So that's the stance there. And now, and we still have some long positions. They seem to be holding okay. I don't mind being taken out. I don't mind having a build-up of cash at this particular point. I think it's conducive to the situation that you want to be a little bit cautious. We had a short on the IBB at the 296s. It went all the way down to 288, I think it was, 28 from there. So 288.68, and then we got stopped out for break even today. I just didn't want to even hang around, even though it looks to me like it's having a tough time. So a break-even trade, I could have taken 8 points. That would have been a nice 3% or something like that. But you know what? Cash is very nice. I said I'd finish off. Let's go to the dollar. See, the dollar is very interesting because the dollar was rallying earlier. It's given back a chunk, hit the 9-period exponential moving average, couldn't handle the hopping over it. It just didn't have the power. And now what we're looking at is that the dollar and gold, look, here's gold, are showing weakness. Gold is down 3 at 1342. The pattern is showing weakness. It's not down all that much. But if you look at, that's the daily. If you look at the weekly, and one of the reasons why I've been very impressed with gold is that anyone who's been shorting right here, you've been vulnerable to decay if you've been buying puts or anything like that. If you're holding the DZZ or something like that, that's short gold, if you take quick profits, you're doing very nicely. But if you hold a little too long, it comes back to almost break even. And that's what you've got to be careful of, because I think that gold is holding in a rectangle formation. I would not be surprised in the analysis that I did when I did my webinar just recently. Let me just do this here, long-term charts. I don't want that. I'm going to get out of that for the moment. Okay, just to say, I still think that yields are stuck in a range, and that I don't see very much at this point. I do see that there could be a little bit of a pop-up, but not all that much. And so far, it hasn't really helped the XLF all that much, and you would expect that the XLF, the financials, would be the clue to say, hey, we're getting out of here. We're moving upside. We've had enough of this 22, 23 range for ages and ages. We want to get into the 24s. So far, it's just real tough to do. Now, I want you to show you this. I'm going to go to these charts. I'm just going to pick them up arbitrarily. Let's go to White Dow. Let's go to the coda phase, all right? Oh, that wasn't really the one I wanted. That's okay. So the coda phase is, these are the charts that I've been looking at in much greater detail. You know what? I don't want to go to the coda phase. I'm going to close the workspace. Take me a moment. I'm going to go to the other one, and that's really the chart that I want to see. And we're going to just pop them up. So 1920s, market top comparisons. There we go. And what I'm going to do, Dow's down 55, S&P's down almost 6. So what I'm going to do is I'm going to show you something very interesting. I did this on my webinar. I'm going to do a little bit of it here just to show you. Remember, we were looking at, this is over a year ago, I had a webinar in which I said, is this wave 3 and about to conclude wave 4? The Dow was at 16,390. This was back in the 6th of March of last year. And what I said was, is this going to conclude with a wave 4 to the downside and then wave 5 to the upside? And this is Elliott wave. I tried to separate the Elliott wave from the Chapman wave, but you know what? The more I did it, I found that I really needed to do the Chapman wave simultaneously. And basically what it said is, if there was another high above 18,351 in the monthly chart of the Dow, that would say to me that we're in leg B or C. It turned out to be C. And it says that there's a buy mode, and that buy mode should go to higher highs. That's the simplest of the techniques that you can ever wish to have. I'll come back and I'll talk about it, and I'll show you the chart patterns that we're looking for. And the Dow, as I say, is down in the 50s, down, S&P's down 5. I'll be back, and we will talk about the longer-term outlook as soon as I return. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just get this here, and I can show it to you a little clearer. This is what I wanted to show you for those who are new to my work. In fact, let me make that a little bit smaller, and then I can get it all to fit in very nicely. There it is. Okay, Chapman wave, and then I'm going to make it like this. I'm going to say snag it. I'm going to snag it right there. And then I'm going to place it here. And I'm going to expand it, resize. Let's make it 130 or something, 140. Ah, there it is. Good. Okay. So this is it. I had it before. I seem to have lost it. Chapman wave buy signal to buy mode. What do you do? You try to identify the lowest, most obvious low bar. and then you merely count each successively higher peak. And each peak is labeled alphabetically in order, uppercase A, and then you go 1 penny above A, and it goes to B. 1 penny after it pulls back, that makes, so it's called a floating letter. In other words, even this letter here, whoops, where did I go? Uh-oh, right here. So even here, as long as that is a C right there, and then it's called a floating letter, and until it makes a peak, that becomes a peak C. That's a floating leg D, and then as soon as it makes a peak, it makes a peak D. It's at the fourth highest peak that other things can happen. And it can go higher, but that's really your objective, to get you to a buy mode that takes you nicely. Oh, I didn't mean to do that. Right there. There. So you come down, identify the lowest low bar, and you merely count each successively high peak. When it goes past B, that invariably is taking you to a C, and that usually takes you from a buy signal to a buy mode. The buy mode implies immediately, the moment you say buy mode, you've got an up arrow, it implies you should go to 4 higher peaks. That's the simplicity of the Chapman wave. Now let's go back to the monthly chart that I was looking at, and I'm going to do it with all the technicals, and I'll show you something very interesting. Why is it interesting? Because the Dow, when it snuck past 18,351, it started leg C. It also is another pattern called the Chapman wave stalk leg. Don't want to get into that right now. Basically, it's a whole series of highs that is it's like a straight line up. Then it starts to make an oval pattern, and then it breaks out the oval pattern. It goes to a higher high, and that's the neck. That's leg C. And the big question is, hey, that's C. Is it going to go to a D before it comes back, or is it going to pull back? And what is the pullback? And a whole bunch of things. Let's go to Robert in Chicago. Robert, how are you?
Hey, Basil, how are you?
I'm very well, thank you.
So, Basil, I have a question about Goldman Sachs.
Yes.
Can I go long Goldman?
Yep. Oh, can you go long Goldman? You know what I'm going to suggest? Let me just show you something. If you're able to look at my charts, it's a real tough one. There are a number of charts that have gone to a very clear C, peak C, from the daily pullback. In this case, Goldman Sachs GS trading at 165.96, down 27 now. What came off the 138.20 low way back in June. It made it absolutely clear there is no fuzziness whatsoever. A peak A pulls back, goes soaring up to a peak B, pulls back, goes to a C, and then the MACD and the stochastic pull back as if it had all the characteristics of a D. Well, I can't make that into a D, it's a C, and it stopped right at the 200-period exponential moving average. We were actually talking about it when I was on air when it did that, and I said, okay. When it made that C, I said it should go to a D. What comes out of here is going to be very important. So what happens is it goes all the way from 164 down to 155. That's 9 points. That's a big pullback. The MACD pulls back. The stochastic drops all the way down to 20%, and then it starts a new move up. Here's the question in the Chapman wave. Is that a peak D, and now we've started a brand new A, B, or is this the old E to F? So here's my thinking. Number one, I think the financials are holding very well under these circumstances. Number two is the stochastic in Goldman Sachs on the daily chart is at 92%. That's very strong. The MACD is good. It's not great. It's struggling a little bit, but it's nothing bad about it. It's just not as strong as it was. The price is above the 9-period moving average. 163 is the 200-period moving average support. And the weekly chart has improved tremendously to the point where it is 168.90 is what it needs to get to for leg D, and it hasn't got there. So this is what I'm going to recommend, even though this is a kind of a mixed market right now. If you think about it, you don't have to jump in right now, but I'm thinking that if you started your position, would you do it via options or just purely with the price? Just the stock?
Yeah, the stock.
Okay. Then I'm going to make the suggestion, and as I say, think about it because there are a number of ways of doing it, but I would start a position here at 166, and it would be a starter position. Why? Because I think even if Goldman Sachs pops up a little bit, it looks technically as if it wants to form a little bit more of a base between 164 and 162. So I'm going to recommend start the position here, but this position, I don't know what percentage it is that you would give it, or what point you would give it as a stop. Even though it's a starter position, I would still have a stop because it shouldn't break that level if I'm correct about it moving higher in this environment. And that says that the low that was made on the 11th of August at 161.93, that's 5 points. I would actually say 6 points. If you start a position now with 6 points, stop. I would wait to see how it tests the 163, 162 area. And that's going to say to me, hey, gold, in fact, I'm thinking that the financials are the next sector to move higher if this market can correct rotationally like it seems to have done so far. So if it can pick up the sectors that were good and lay off the ones that have had a bounce but are not really breaking out, like the financials, I got a feeling that you could use that as a starter position. Now, what would happen if you started your position at 165.90, 166, and then all of a sudden we're looking at it at 169, and now you've only got your starter position. So this is what I'm going to say to you. Have it as a starter position. If Goldman Sachs in the next 3 days is able to go above 167.50, I would add another very small position to that. My preference is that you're in now, and it just takes a bit of a breather, pulls back with the market, maybe 2 points, holding very nicely right now. And then I want you to give me a call. Let's look at it again to see, is that the place to add? Ideally, you want to get a 166-ish right now, and you want to start a second small position at about 163.50. And that's going to be the big test. And because if it only goes sideways and then out of the blue there's a market spike to the upside, whether it's because yields start to climb, it doesn't matter. I think that this is the tell, because this is going to be an H shape in the weekly chart and a failure pattern. If it doesn't break out, I would say within a week, if it's not breaking and holding the 168, 169 area, then we're looking at either sideways or just the H pattern goes to an M pattern, lowercase m, and then we have to see how it tests the bottom. I like it as a starter position. I don't know if that suits your technique.
Yeah, that's fine, Basil. And Basil, can you check?
Hold on. Let's do this, because I also want to look out for the monthly chart. So if you can hold on, let's talk about that. Can you?
Yep, sure. Thank you, Basil.
Right, we'll be back at Robert in Chicago looking at Goldman Sachs.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So let's see, we're looking at Goldman Sachs. And Goldman Sachs right now down 24 cents. And I said to Robert that there's a particular pattern in the weekly chart that I'm intrigued about. And this is the pattern is this. There's a pattern that I call the lowercase h pattern. And that essentially says it comes down quite sharply. And then it stops, has a little bit of a bounce. And that bounce essentially makes an arch formation. That arch formation looks like a lowercase h. But if the right side doesn't take out the left side and there's a bounce, that bounce should go to at least the left side peak of importance or the arch high. And in this case, that would have been because the low that we would be looking at is 139.05. That would have been up at the 160, 8 area, 168.90. But because it went below but closed above, it went actually to 138.20. That made a trough E, and the rally says, okay, now you can bounce, but you should only go to the next left side high of importance, a peak of importance. Maybe you touch the previous high, arch high, but then you should fail. So that's the category we're in now, except for one thing. If the pattern of the H turns into a potential cup formation, and the stochastic is rallying sharply, and the MACD are rallying sharply in the weekly. In this case, the stochastic's at 89%. That's good. And the MACD is good. And we've already gone to like a mini A to B in the second rally. And that says to me that if there's a close above, let me be a little safe, if there's a close in the 170 area in the next 2 to 3 weeks without breaking under 160, that's going to be really good because it suggests that now there's a cup formation with a successful H. So that's the reason why I'm saying I would start a small position. I just wouldn't get carried away. Get a small position. Whatever you're going to do, make it much smaller than you initially thought of. And then I would add on that break to the upside. I think I said 167, 167.50-ish. I'd add another little bit. That one only has a 2-point stop. And then you might even... You don't have to raise the stop on this core position, the small little position that you would be buying until it really gets to the 169 area. Then you can say, okay, I'm just locking in everything. But the most important thing is, how does it handle a slide to the 162? So you had a question, and that is?
Well, if it went to 162, I'd be buying this. But I wanted, if you could, do you have this on a monthly?
Yes, right here. On the right. So it's daily on the left, in the middle is the weekly, on the right is the monthly, and Goldman Sachs had a high of 250.70 way back in 2007, plummeted down to 47.41, bounced, then plummeted again down to 84, and now it's 218.77 is the high. Look how it's held the 200-period exponential moving average each time. Each time you bought it, if you were able to have the patience to sit through a whole. I don't like to do that, but I'm saying look how strong the 200 period moving average is. It's almost like that's the fulcrum level that says underneath it, it should then spring back up. This time it didn't even touch it. It just missed it at 138.20 in June of this year. That index was at about 157.70, and it went to 138.20, and it went to one. Yeah, it might have just touched it. So the 200 period moving average is doing exactly what it needs to do. I'm just a little concerned that the stochastic in the monthly is stuck at 23% and flattening, and the MACD is flattening. So you have to have the daily lead the weekly, and then the weekly leads the monthly. So yes, it's in trough C in the monthly chart. I like the fact that it's only every other trough B or trough C has been a major buy signal for Goldman Sachs. I'm just looking at the history. The 9-period moving average is at 164-ish, and it's trading right now at 165.83. So far it's holding, but the monthly is young. So that's why I'm saying this is for risk reward with the potential that the financials possibly could become a sector leader once again. It's going to take a bit. It might even need, you see the yields pop a little bit higher. We haven't really seen that yet, but Goldman Sachs, I think now is acting way better than it has for a long time.
Perfect analysis. Thanks very much, Basil. I appreciate it.
Thank you for calling, and tell me how you do. So that's Robert in Chicago looking Goldman Sachs. Now let's do a couple of other things. What I want you to do is this. Within the context of sectors, if you look at the IYT, the IYT has, you see, Goldman Sachs actually went to higher highs on that arch, the right side of that V-shaped pattern. The IYT, the transportation iShares, has not done that. In fact, I keep raising this, but it's almost the same story in the weekly chart. A series of levels that make for resistance. Let me just do that with this particular. There you go. So what we're looking at is that there's a Chapman wave inside track repellent zone. Let me pull that back a little bit, put that down. And that just basically says, it's real simple. If the IYT is able to trade instead of at 141.60 down 94 cents, if it's able to trade and get above the high that was made in June, the week of the 15th of June, 144.41, it's only 3.5 points. I mean, it's a transportation index. Oil's coming down. Well, what's the big deal? It should be able to do that. Stochastics at 82%. The MACD is good. So far, it hasn't. And that's just saying to me that there's a rotation going on. We're going from one sector to the other. I'll go back once again to the IBB, and then I'll show something else. IBB is probably pulling back a little. Yep, now it's up only up 443, 294.74. I don't know what the reason was for the spike to the upside, but the fact is that this rotational correction is saying fund managers, especially since it's quiet, and in a lot of places, what they do is they have the chef on the boat is really guiding the indices, because they're out and they have to keep calling. And they were told, if the market goes up, you've got to follow the market. If it goes down, you follow the market. You cannot lose any money. That's the command from the captain all the way down. And anyone there is left is the chef. And the chef says, geez, okay, every time it moves up, I'll just chase it. Every time it moves down, I'll just chase it. So in fact, what we've got is a little trading band, and it keeps rotating through the different sectors. Look at the PPH, which is there was a PD. I can now put a down arrow there. So the PPH is the Van Eck Vector Pharmaceutical ETF. And if you look at it, it made a doji, two dojis at the top of this last rally. It made a high around about 62, was it 30 or something? I think, oh, come on. 62.22 on the 2nd of August. It's pulled back just sideways trading range, although it does look like it wants to test the low over there of 61.14. But look at the weekly chart. The weekly chart had a very strong move, and now it's just going sideways. Remember, in a bull phase or a bear phase, sideways is time, it's usurping energy. And that usurping of energy, of course, and now I can't even find that little switch, that little shut off the No, but it's gone. I don't even know where it is. So we'll have to just beep our way through until the next break. So this is what we're looking at. We're looking at the PPH is at 61.18, up 9 cents, but just stuck in a range. And they soared. They went from 55 all the way to 62. I mean, that was a big move back in July into early August. So that rotation is going to be important. If the market keeps rotating, we don't have a big smash to the downside. We just have corrective phases in different sectors. I'll be back. Basil Chapman. Dow's down 45. S&P's down 4.5. Be back after these messages for the final segment.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Trade what you see. How to profit from pattern recognition. Larry Pesavento. He's got a webinar coming up on Wednesday night. If ever you want to learn from the absolute master of pattern recognition, master of the Gartley formation. In fact, you know, when I read Gartley, page 222, it's amazing that Larry had the foresight to come up with putting everything together. It's not all that clear. Larry made it very clear. So Gartley patterns, butterfly patterns, it's an absolute pleasure to listen to him, and certainly to be educated by Larry is a very special thing. I highly recommend that you go to the webinar on Wednesday night. I'm sure you will just, your eyes will pop out. You'll see stuff that really tells a story of the market in a way that essentially gives you a template that you could use It's really nice. It gives you the confidence. When you have a pattern and you're looking at, say, 618, and you got this trend line. I keep asking for someone to help me get TradeStation to do a trend line with a percentage. That's all I want, just to go click from this point to that point and tell me what that trend line percentage is. That's all. It's a simple thing. But I haven't been able to get it done. I haven't actually spoken to engineers there, but other people have said they were trying to do it, and they haven't. And it's such a shame. And he has all these different techniques. So take the opportunity. Now, I want to do this just for a moment. I'm going to say, if I'm looking at the volatility index, and I can't remember now if I featured it over the weekend. I usually do. But it seemed to me it was so obvious from the week before to this week that it was almost the same pattern. I just can't remember if I did it because I did a lot of charts while I was on vacation. But in the meantime, if you're looking at this, the pop-up that we've had today, what I suggested is that the pattern we're looking at in the weekly and the monthly suggests to me that we're getting into an area that says you could pop up at any point for a shorter term counter-trend down move and a counter-trend moving the volatility index up. Counter-trend meaning it's against the larger picture, because the larger picture is suggesting at this point that there should still be lower, and maybe not lower lows, but we should still stay in the low range, meaning the 11s, or maybe go to the 10s before there's a big breakout to the upside. That's going to be our next very sharp pullback. And this is actually, right now is the period where if you're in the party in power, this is where you say, hey, let's just get rid of, and let's just have a little pullback now. Let's get rid of all this because we want strength going into the election. That's just the way it always works. All right, it doesn't matter who's in power. So I'm just saying, this is the opportunity. So far, it's just been a very orderly correction. Look at this. Slightly lower lows, slightly lower highs, just the same as it was back in late July. What was it, July 20th or something, into August the 2nd. That's the way I'm looking at it right now. I'm not sure I'm looking for any big smash. However, the surprises could be to the upside, and that says any close. I'm going to be very positive if there's a close into the 18,700s. 18,668 is the all-time high. So if the Dow goes to the 18,700s, that's going to be important to me. And just one quick thing here. You remember the chart I talk about very often? I showed subscribers very often. I showed it over the weekend. I had back in 2000 September when you had peak that first pullback from 71.64 in the New York Stock Exchange. Then it rallied sharply from the 2003 low. It went to the October 2007 high at 10,038. That was the second one. Plummets down, goes all the way to the 4,000 level, and then we run all the way to 11,254. This pattern right now is with a question mark. There is no I like what I'm seeing so far. So this is the monthly chart of the New York Stock Exchange, acting pretty darn well. All right, I'll be back tomorrow. Check out my opening call. I think you'll find it really interesting and hopefully profitable. I'll be back tomorrow. Have a great day. Don't forget Wednesday night, Larry Pesavento webinar. Don't miss it. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.